What's up, millennials? Would you like to invest in SpaceX? Well, I might have an option for you, even though it's an indirect investment. Today we're going to be taking a look at the valuation of a company called Velo3D, which is a 3D metal printing company that is working for space companies like SpaceX. And this company is going to be acquired by the SPAC that's currently trading under the ticker symbol SPFR. Before we start, if at any moment during this video you don't really know what I'm talking about, please check out my SPAC guide that I released a few months ago. It's going to be somewhere in the description. Today we're going to be taking a look at method number 1. And if you want access to the Excel sheet I'm going to be using today, you can join our Discord for free. You can just go to nesami.com/discord, then you can leave your name, leave your email address, and you're going to get access to it. And of course, as always, don't trust me, verify me. I'm just documenting my journey here on YouTube. I'm certainly not a financial advisor. Don't copy my numbers as is, but always use your own numbers, your own multiples to come up with your own fair price per share. Velo3D is a company that is focusing on 3D metal printing for space companies like SpaceX. And as we can see in the investor presentation of Velo3D, their technology is, for example, used for the Raptor engine from SpaceX. SpaceX seems to be quite happy because the head of additive manufacturing at SpaceX said that Velo3D is at least 5 years ahead of any competition. But apart from SpaceX, they have many different clients, many other clients in the space sector, aviation, energy, and other industries as well, as we can see in the investor presentation over here. Companies like Astra, Lockheed Martin, Honeywell, Siemens, Honda, etc., etc. And if we look at some of the strategic investors of Velo3D, we again see the company SpaceX, and we can also see that ARK Invest is actually accumulating shares of this SPAC of SPFR. And by the way, if you're wondering about the merger date, well, unfortunately, we don't have a date just yet. And if we then take a look at the pro forma valuation, we can see that they started out trading at $10 per share, which is of course very common for SPACs. And we can also see that they are going to have 208.6 million shares outstanding after the merger. Keep in mind that this is excluding 21 million earnout shares, which is currently out of the money, and also 13 million warrants. So keep that in mind. At some point, those are going to be added, of course. So then we can also already calculate the pro forma equity value and the pro forma market cap by simply taking that amount of $10 per share, multiplying it by the amount of outstanding shares, and that is going to give you a pro forma market cap of almost $2.1 billion. Then to arrive at an enterprise value, a pro forma enterprise value, you only need to take a look at how much cash they are going to have on their balance sheet. And according to the investor presentation, that is going to be $472 million. So if you take that market cap of almost 2.1 billion, if you subtract the amount of net cash, 472 million, you're going to arrive at an enterprise value of $1.6 billion. However, if we go into TradingView, we can see that the price has gone up a little bit compared to that $10 per share. Right now it's sitting at $10.47, as we can see over here. So that's the number you can plug in over here. And then you can see that the pro forma market cap has gone up a little bit to almost $2.2 billion and the pro forma enterprise value to a little bit more than $1.7 billion. So keep in mind that right now, based on a price of $10.47, the company Velo3D is worth a little bit more than $1.7 billion. But that is, of course, the pro forma enterprise value. We want to know what a fair enterprise value is. And for that, we're going to apply a very simple formula. We're simply going to take a look at the revenue of a certain year, and we're going to apply a range of multiples to that revenue to arrive at a fair enterprise value. So we need two numbers, the revenue and the fair range of multiples. For the revenue, we can simply take a look at the investor presentation. And for this video, we're going to be taking a look at the revenue of 2025. So here we can see that they already have a little bit of revenue, not that much just yet. In 2020, they had about $19 million in revenue, and in 2025, they expect to scale that up all the way to $546 million. So that's the number you can plug in over here, and of course, this is an expected number. We don't know for sure if this is going to happen, but it is the number we are going to be working with today. And then the other number we need is a fair range of multiples. And here in the investor presentation, Velo3D compared itself to other companies out there, which are similar companies. Companies like Desktop Metal, Protolabs, Markforged, Materialize, etc., etc. And they looked at their revenue multiples of 2021 and sometimes also for other years. But right now we're mainly going to focus on the multiples of 2021. So for example, if we look at the multiples, we can see a multiple over here of 7.6x, 10.5x, 4.7x, 6x, 15x, 7x, etc., etc. So it looks like that the most of the multiples, the majority of these multiples is around that 7 to 10x. And this range of multiples, 7x on the low end, 10x on the high end, is also the range of multiples that Velo3D is using in its own investor presentation to show what they believe the company is actually worth. So that's the range we are going to be working with as well. 7x on the low end, 10x on the high end. And if you have those numbers, well, the Excel sheet is already going to calculate a few things for you. First of all, what it's going to do is it's going to take that revenue of 2025, which was $546 million. And then it's going to multiply that, first of all, by that low multiple of 7x to arrive at an enterprise value of $3.8 billion. But it's also going to multiply it by the high multiple of 10x to arrive at a high enterprise value of almost $5.5 billion. Then you can also determine the midpoint valuation, which is basically the average between the low and the high valuation, and that is going to be a little bit more than $4.6 billion. But these are, of course, the enterprise values for 2025. We've looked at the multiples of certain companies in 2021. We applied them to the revenue of 2025. So there's a discrepancy between these numbers, and we now need to discount the numbers back from 2025 to 2021, which is, of course, the year we are living in right now. So we need to discount this back to the present. And for that calculation, we need two numbers. First of all, we need a discount rate, which is going to be 20%, which is the same discount rate as they used in their investor presentation. We can see that over here. And we also need an amount of years to discount it back from 2025 back to 2021. Now, as we live in 2021 and as the numbers are of 2025, there are 4 years between those two amounts of years. So 4 years is the number we need for that, and 20% is the discount rate we are going to be using. So if you plug in these numbers, if you put 2025 and 20% in the Excel presentation or in the Excel sheet is already going to calculate the rest for you. But I'm also going to do that manually so you can see how these calculations actually work. So what the Excel sheet is going to do, and let's first of all start with the low enterprise value of $3.822 billion, 3.822. It's first of all going to divide that by 1.2. The 2 here, which is standing for that discount rate of 20%, which we just decided to use. And that is going to be to the power of 4. Because of those 4 years, we need to discount it from 2025 back to 2021. So if we do that, then we're going to arrive at an enterprise value, a discounted enterprise value of a little bit more than $1.8 billion, which is also the number over here, and also the number in the investor presentation, more or less, $1.84 billion. We can then do the exact same thing with the high multiple of, or the high enterprise value actually, of $5.46 billion. We again multiply that, or divide that rather, by 1.2. The 2 again standing for that discount rate of 20%, to the power of 4, again those 4 years from 2025 back to 2021. And then you're going to arrive at this discounted enterprise value of $2.6 billion in the calculator, in the Excel sheet, and also here in the investor presentation. So those are the enterprise values. And of course, you can also determine the midpoint enterprise value by taking the average between this number and this number, which is going to be a little bit more than $2.2 billion. That, of course, is the enterprise value. We want to know what a fair price per share is going to be. Well, to arrive at a fair price per share, we first need to go back to a fair market cap. And we do that simply by taking these enterprise values, adding back the amount of net cash, which is the difference between an enterprise value and a market cap. And then we're going to arrive at these fair market caps. So for the low end, that will be 2.3 billion. For the midpoint valuation, 2.7 billion. And for the high valuation, 3.1 billion. Now, the only thing we need to do is to take those market caps, divide them by the amount of outstanding shares, 208.6 million shares, And then you're going to arrive at these fair prices per share. So for the low end, $11.10. For the midpoint valuation, $12.99. And for the high valuation, $14.89. So according to these calculations, that would mean that Velo3D currently is actually slightly undervalued. Now, of course, don't trust me, verify me, always check what I'm doing, always check if the calculations are actually correct. And also keep in mind, we have been taking a look at assumptions. We've taken a look at the revenue of 2025. We've applied a certain range of multiples to that revenue. So if you believe that range of multiples should be higher, maybe it should be lower, maybe you think the revenue is going to be higher or lower. If you change one of those variables, the entire calculation is going to change and your fair price per share is going to change as well. So let me know in the comments what you think about this company. And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye.